What's up guys, Jake here. About 2 months ago on the channel, we talked about Alibaba stock. Now, Alibaba the company is doing fantastic. They're the Amazon of Asia. They're involved in entertainment, cloud computing, fintech, healthcare. This company has tremendous growth potential as it continues to expand across Asia and the rest of the world. So the company itself is doing just fine. However, the stock price of this company has been doing terrible the last year. It basically peaked at 317 a share 12 months ago, and it's been in a downtrend for an entire year. The share price of the company is down 56% over 12 months. And this is not a small company, guys. The market cap is currently $482 billion, meaning it almost hit a valuation of $1 trillion a year ago. And there's only a handful of companies that have done this so far. And 2 months ago I said, do not buy this stock. Do not buy Alibaba yet because the technicals are still showing that it's stuck in a downtrend. However, according to the last 3 weeks or so, I think the downtrend has been broken. It looks like Alibaba has bottomed out on October 4th at $139 a share, and it's currently up 27% over the last 3 weeks. So this is a pretty good indication. Before we get to the more detailed chart, let's just review the fundamentals about how ridiculous Alibaba currently is. So when we look at their revenue, let's see here. So their most recent earnings report was June 30th, so they're probably going to have another one next month. And this company grew its revenue 46% year over year. So from June of 2021, from June of 2020, it went from 21 billion in revenue to 31 billion in revenue. Tremendous growth for this company. It's ridiculous. When we go to the price ratios, this is what makes it look so appealing right now. If you guys aren't familiar with this website, it's macrotrends.net. It's free, which is why I use it. But the P/E of Alibaba is currently only 21, price to earnings. And once again, we want this the lowest. We want this as low as possible. So Alibaba, over the last 5-6 years, has been valued in the 40 PE, 50 PE. So we're getting at a tremendous discount right now. Let's go to price to sales, and it's currently at a 4, which is the lowest it's been since Alibaba was listed in 2016. Let's go to price to free cash flow. Free cash flow is very important. And currently it's at 14, which once again is the lowest Alibaba has even been. And this is after the 27% increase over the last 3 weeks in the share price of the company. So let's check out their technicals, and you can definitely tell as the 20-day starts turning up that it does look like the share price has turned around. It was stuck in a very strong downtrend, bouncing off the 20 as soon as the 50 fell below the 200. This was a death cross event. Alibaba's share price was in trouble once that happened. But when we look at just the last couple weeks, once again, it made it through the 20-day, it made it through the 50-day, it's approaching the 100-day. That's a very good sign. Ideally, if it started trading sideways, that wouldn't bother me. I would like some consolidation in Alibaba's share price. But down here, I'm showing you the stochastics. And the stochastics is one of my favorite technical indicators. And when, obviously, these two lines go up through what we call the sweet spot, that shows that a very strong uptrend is possible. And Alibaba has made it up into this upper range a couple times and then fallen immediately back down. However, over the last 3 weeks, it's stayed in this upper range, which is really important. When we switch to the stochastics of the 1 week time period, it's showing a very strong uptrend here. As soon as it breaks through here on the weekly stochastics, it's going to get back to an upward motion similar to how we had when Alibaba took off in late 2020. So what has happened in the last 3 weeks to cause this reversal of Alibaba's technicals? Once again, the fundamentals of this company have nothing to do with the share price movement of the company right now. And there's been a couple newsworthy events. The first one is that Alibaba's founder, Jack Ma, has resurfaced in Hong Kong. It was exactly 12 months ago when the downtrend began for Alibaba. Jack Ma was critical of the Chinese government and critical of Chinese regulators, and they do not have free speech in China. Because he was the richest man in China, he probably thought he could get away with it, and the Communist Party government had to exert its authority. So they forcibly removed him from the company and put him under house arrest. This is a great contributing factor why Alibaba has been in a downward spiral the last 12 months. But maybe exactly 12 months was his period of probation from the government. He behaved, and now he's allowed to freely travel again, make public appearances, meet with other business leaders. He's no longer involved directly with the company, but just the fact that he's not dead and moving around freely is giving investors a lot of confidence. Additionally, the share price has gone up because a new chip is going to be released from Alibaba in Europe. Once again, Alibaba traveled outside of China, which is a good thing. And he actually visited Spain. So he went from Hong Kong to Spain, making public appearances. He got to go on vacation on his $1.6 billion yacht. That sounds pretty fun. The next thing that was giving Alibaba a headache from the Communist Party government was the government basically just wanted money. So Alibaba's new CEO defends the company's $15.5 billion donation to China's Common Prosperity Drive. This is basically just a shakedown from the government. This is just good PR. Yes, $15 billion is an absurd amount of money that Alibaba is taking from the company, taking from their shareholders to redistribute towards various government and social programs. But this is going to be paid over several years. So let's think about this. Alibaba's got to pay the Communist Party government $15 billion to basically get them off their back. Let's go back to their profitability. So let's look at their net income. And how much is $15 billion? So last quarter, they made 6. The fourth quarter, they made 12. $15 billion is probably what they're going to make in the fourth quarter of this year alone in profit. Yes, that's money that cannot be reinvested into the company. It's going to this Common Prosperity Fund. But once again, if this is what Alibaba has to pay to play to be uninterrupted by the communist governments, okay, they'll just slowly pay this over a couple of years and they'll be able to keep expanding across Asia. Is what it is. This is how they operate in China. The next piece of good news out of China is that the fallout from the Evergrande real estate company isn't that big a deal. I guarantee you watched a couple of videos on this of finance YouTubers saying that this could be a potential Bear Stearns market global collapse event, and it really wasn't, guys. I wasn't too concerned about this. But apparently Evergrande has made a key bond payment that keeps it out of default. The Chinese communist government is working with the company to make sure that this is mitigated. Real estate is very important in China, more so than their stock market. People get rich in China from real estate, not stocks. So to make their people happy, to keep the peace, they needed to make sure that this real estate company did not blow up the entire real estate market of the company. The next piece of really good news is that Charlie Munger, Warren Buffett's number 2 man, is doubling down his investment on Alibaba. He initially bought into Alibaba earlier this year. So I think he bought in at around when Alibaba was in the 250 range. So the fact that it keeps falling, to a value investor, this is very exciting. In some way, when you're trying to build a position in a company, the fact that in the short term it goes down really makes you excited. And Charlie Munger, who's 97, the vice chairman of Berkshire Hathaway, let's see here, how much did he increase it? So he now owns 302,000 shares of Alibaba, doubling his initial position of 165. So the company's Alibaba stake is now worth $45 million. So if Charlie Munger, who everybody knew bought this 6 or 8, 9 months ago, if he had sold out, that would have caused a panic. Everybody would have been like, the VIE structure of Alibaba is not secure. This company is going to get delisted. The communist government's going to shut them down. The fact that one of the richest men in America doubled his investment as the price kept going down. This is giving a lot of other big investors confidence, which I think is greatly contributing to the recent uptrend. So for these positive factors that have unfolded the last couple of weeks, I now personally feel like this is a good time. According to the fundamentals, the technicals, and the news, it's a good time to buy Alibaba. I would recommend it to other people. With that said though, know that this company entirely right now trades on news out of China. So if there's more bad news out of China, that Alibaba's share price will fall. What could be some potentially bad news? Well, China really wants to retake the island of Taiwan. Taiwan is currently basically an independent territory. It's not its own country. It's not part of the UN. It's still technically part of China, but the Chinese government has no control over it. And the United States offers military protection to China, and it really doesn't make China happy. So if China, for whatever reason, gets into some kind of shooting war over Taiwan with either Taiwan or the United States, yeah, I think that would affect Alibaba's stock price in the near term. So what kind of position have I taken in Alibaba? And in my Schwab accounts, I have about $57,000. I'm just going to toss in about 10%. I'm actually going to buy the stock in my Schwab account. So I did that this morning. It's actually gone down 1%. My cost basis is $5,367. So the current share price of Alibaba, let's just go to it here, is 176. Where do I see this going? Where do I want it to go? I definitely want it to get back to 250, maybe 300. Tremendous upside. Once again, if they have continued growth, good quarterly earnings statements, and there's not bad news, this should nicely uptrend in the near term. With that said, if there is a newsworthy event and the technicals turn on Alibaba, if this thing starts dropping again with lower highs and lower lows, I will be the first one to pull the ripcord and bail out of this stock. I have no commitment to Alibaba in the long term because I don't think it's trading based on its fundamentals. It's trading on news. So if something newsworthy event happens, yeah, I mean, I'll probably just sell out, wait for it once again to bottom out, and then buy back in. I would like to just buy and hold. I think that would be easier, but once again, this stock is so temperamental with whatever the Chinese government decides to do. Additionally, just to play it a little bit more, I did buy 2 calls in my Robinhood accounts just to kind of soup up some profit here. So we'll see if this does take off in the near term, how much I can make from my, 30 shares in my Schwab account and my 2 calls in my Robinhood account. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, in a comment down below, let me know what you think of Alibaba stock. Till the next video, take care.